Hi guys, my name is Nicolette Mashile. I am also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today we're talking all things the next strategy for you to be able to use to plan how and what type of Forex trader you're going to be and the types of positions that you're going to be trading. But please do remember that none of my videos constitute as financial advice. If you are looking for financial advice, please speak to somebody that is certified and registered with the FSCA. And this video is brought in partnership with OctaFX, and OctaFX is an international Forex trading broker. So today I want to speak a little bit about fundamental analysis. So what is fundamental analysis? And basically it is the study of how the economy affects the currency rate. So you look at what is happening in the economic space of a specific economy, a country, for instance, you take something like South Africa, and we look at how that is going to have any type of effect or impact on the rate that our currency is valued at. So, for instance, something that happened a week or 2 weeks or 3 weeks ago, no, it was actually a week. Something that happened a few weeks ago was the increasing of the interest rate. Now, we remember the interest rates were decreased during the lockdown period because economic activity had slowed down. And to try and stimulate some economic activity, amongst other reasons, we then got the interest rate being reduced in South Africa, right? That made money a little bit more cheaper for people to be able to borrow. So if you were taking out a loan, if you were taking out a credit card, it means that the borrowing that you were borrowing at was a whole lot cheaper, because when they reduce the prime, the repo rate, it ultimately also reduces how much commercial banks are borrowing from the Reserve Bank, right? So ultimately, now we are starting to see, because of things like hyperinflation, a whole lot of other reasons also, or rather not hyperinflation, rather let's just say an increase in inflation. We're also starting to see now that interest rates are needing to be readjusted. So we had an increase a few weeks ago, and we now know what that actually means for many people that may have credit agreements that are on a linked rate. But it also affects the volatility of the currency in South Africa. So the volatility of the rand, the fluctuations, right? Because obviously we understand that the interest rate is going to be an economic factor that impacts the currency rate. So that's what you basically are looking at. And once you've now looked at that and analyzed economic factors that are going to have an impact on the currency rate, you start to chart what we call patterns and trends. And based on those patterns and trends, the next time an economic of the same occurrence happens, then you almost can, and I say predict what could happen, but you read the chart and the trends and you look at the behavior of the currency based on the economic activity that is going to happen. So some other economic activities could include policy changes. It could include even changes of your governor. For instance, our governor currently is Lesetja Kganyago. If you change the governor, it can potentially change, it's an economic newsworthy story that could potentially either strengthen the rate, the rand, or the rate, the currency rate, which is the rand for us, or it could weaken it. It depends on obviously what the sentiment is around the market. So this is what we talk about when we say you are doing what is called fundamental analysis when it comes to your trading. You could also do fundamental analysis when it comes to investments. Sometimes some economic happenings can have an effect, for instance, on some of the JSE listed. I mean, we saw even globally at some point, when COVID happened and they were slowing down in different types of economies across the world, the JSE or listed companies were taking big knocks, especially those who, for instance, your Sasol, it was taking a big knock. So those types of economic issues tend to have an impact on the currency rate that we are all, depending on the geographical environment in which you are in, it will then have a huge impact on it. The other economic activity that could potentially have an impact on the currency rate is, of course, inflation, because inflation is the measure of how quickly the prices of goods and services is rising. And we know that this has a direct impact on the supply and demand of a currency, and thus it affects, obviously, the currency rate. Now, the major economic indicators that we have are, of course, your GDP, of course, your CPI, and your PPI. The next factor to look at is employment, or in South Africa, you may even want to say unemployment, because obviously the more people that are working, the more people that are spending, and the more people that are spending, the stronger your currency could potentially get. Now, when we look at economies such as South Africa that have such a high unemployment rate, you actually have to factor those types of in. So when jobs are created or unemployment is even just reduced by even a percentage, it potentially has a good impact on our currency rate because it can strengthen the currency of our country. Have you ever thought that you just going to the shop and actually doing some shopping can have an impact on the currency rate? It's actually an economic indicator that we do look at because we know consumer spending generally happens at a retail level. And because it happens at a retail level, it also means that there's economic activity that's happening within our economies. And that, of course, also has an impact on the currency rate. Now, all of these, if you take all of these into account and you actually just analyze them, you are able to start charting the patterns and the trends that will help you open positions when it comes to your trading. And therefore, it helps you strategize the type of trader that you can be. Are you a trader that looks at fundamental analysis, looks at sentimental analysis, looks at technical analysis? All of these things are very important because ultimately they will tell you the type of person, first of all, the type of trader that you actually are, how to make sure that you are mitigating risk. And I think that's the most important thing, is when you use these types of strategies and analysis, when you're reading data, you're not reading it for the sake of just reading it to know. You're reading it so that you can maximize what the data actually tells you. I hope that can help you in figuring out the type of analysis you need to do for the type of trader that you are and the type of risk that you're willing to take when you are placing those positions, or opening rather those positions when trading a forex. I will see you guys on the next one. Just a quick reminder again, none of my videos constitute as financial advice. If you are looking for financial advice, please speak to somebody that is certified and registered with the FSCA. I'll see you guys on the next one.